Welcome to the Explainer. Today, we're diving into a pure, completely objective breakdown of the market DNA geometric system documentation for WTI crude oil. Specifically, we're looking at the data for cycle ID oil_4_1 stamped for June 16, 2026 at 1600 Eastern Time. We're keeping things in a strict documentary tone today, just looking directly at the user-provided data and the geometric architecture. But before we get into the numbers, we have to establish the baseline rules governing this documentation. First and foremost, this is absolutely not financial advice. Second, using leverage above 10 is strictly prohibited within this framework. Third, do not invest essential personal funds. And finally, the information we're looking at today is for public model documentation only. We aren't making predictions, and we are not using traditional technical analysis, fundamental analysis, or quant methods. This is strictly a proprietary geometric system. Here is exactly what we're covering today. 1. Phase 1 entry parameters. 2. Risk and trade sizing. 3. Target scenarios and returns. And 4. Navigating upcoming phases. Let's jump right in. Section 1. Phase 1 entry parameters. Take a look at this layout. What you're seeing here is a fixed and complete chart. Right now, the cycle is in Phase 1, and the price is positioned exactly at coordinate M. You'll also notice a secondary entry labeled PC on the lower axis. Now, PC may or may not be reached, but both M and PC are exclusively Phase 1 variables. We are narrating exactly what is visible right now, without assuming or predicting any future price movements. So, let's translate those visual coordinates into exact mathematical measurements. The primary entry M is mapped at $83.90.5. The secondary entry PC is mapped at $71.35.3. The system then calculates a mean entry by combining M and PC and dividing by 2, giving us a mean entry of $77.62.9. Finally, the trapezoid time duration is structurally set at 80 days. In this system, a trapezoid is defined strictly as a future time plus a price interval. There's no logical explanation to add here, it is simply the geometry. Section 2, Risk and Trade Sizing. This brings us to an absolute structural rule within the market DNA model. I am going to state this exactly as it is documented. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So here is a preview of the exact risk inputs for cycle oil_4_1. The hypothetical capital is $100,000. The expected max drawdown is capped at 5%, which equals $5,000. The third triangle domain percentage is 36.36%. The risk coefficient is 1. The contract size is 1,000 barrels. Now, if we multiply the third triangle domain by the risk coefficient, we get a risk domain of 36.36%. Geometrically calculated down from the mean entry, the expected low domain price sits at $49.04. When we take that maximum drawdown of $5,000 and divide it by the difference between the mean entry and the expected low price, it gives us a raw size of 174.89 barrels. Divide that by the contract size of 1,000, and our total position size comes out to 0.17. But because we have two potential entry coordinates, that total is split in two, meaning the final calculation dictates that each individual trade size is exactly 0.09. Section 3. Target scenarios and returns. The architecture gives us three distinct absolute price targets. Target 1 is the mirror or lower trapezoid, marked at $86.43. Target 2 is apex N, which sits at $99.26. Target 3 is the trapezoid top, positioned at $108.44. Again, these are strictly labels within the geometry. We are not interpreting them. Now, the documentation presents two potential paths. Here is scenario 1. This follows a normal progression from phase 1 to 2 to 3 and then 4. In this scenario, only the first entry at M is triggered. A full exit is then executed at target 3, the trapezoid top. The expected total profit here is $2,208. Relative to the hypothetical $100,000 capital, that's an expected return of 2.2%. Extrapolated over the 80-day duration, it represents an expected annual return of 10.03%. Scenario 2 assumes that the secondary entry, PFC, actually gets reached alongside entry M. In this case, the safe exit for the second entry happens at target 2, apex N. The first entry still exits at target 3. The profit from the M entry remains $2,208, while the profit from the PFC entry to target 2 adds $2,511. Combined, the expected total profit for scenario 2 is $4,719. That's a 4.72% expected return, which translates to a 21.53% expected annual return. Section 4. Navigating upcoming phases. Inside the market DNA structure, phases are really just distinct labels used for observation. They do not imply absolute chronological certainty. Phase 2 is labeled mirror contact. This happens if the price simply touches the mirror or the lower trapezoid. Phase 3 is the N event, which is noted if the price reaches apex N. Phase 4 is completion. This triggers if the price reaches the trapezoid top, at which point a performance summary is provided to compare realized returns and drawdowns against the Phase 1 plan. It's also important to note that market DNA fractals may independently start a completely new cycle, which would reset the system entirely back to Phase 1. So that brings us to a structural question derived exactly from the documentation. Will the next phase be Phase 2 or Phase 3? The answer is, we are simply navigating the market to see what happens next. We are avoiding market forecasts entirely and relying solely on observing which geometric coordinate is encountered next. And that wraps up our direct, objective look at the geometric framework for cycle oil _4_1. If you're a focused learner and want to review more of this public model documentation, you can find further information directly at marketdnaedge.com. Thank you for joining me for this explainer. We'll see you next time as we continue to document and explore complex systems clearly and objectively.